I believe that the OPEC Plus will continue balancing the supply and demand in the oil market. There are a couple of considerations here. So on the demand side, there is obviously a potential pressure from the global economic downturn. Also, there is a big uncertainty about the Chinese policy in respect to the zero COVID policy and how it will pan out. If there is a full easing of the zero COVID policy, then obviously there will be a huge boost for all the commodities. However, if the zero COVID policy remains in place with some technical adjustments, then there may be downward pressure on the oil demand. That's sort of the demand side. But then on the supply side, as you mentioned, there is an embargo on the seaborne Russian oil, which is becoming effective today. But also separately, there are measures which are related to the oil price, to the Russian oil price cap. And it remains to be seen whether the volumes will be affected and how much of those volumes will be taken off the market. So from this perspective, it's a balanced decision from the OPEC Plus, just to make sure that the market remains in balance.
Interesting answer. I mean, that there are really three factors at play here in a big way. The China story, the G7 price cap, and then you've got this ban that's come into effect today in Europe. Let me just dive into the China angle when it comes to the oil price. What do you think is priced into oil markets at the moment with regards to the reopening? Has this, gradual easing come as a surprise to investors and traders in the oil space?
I mean, obviously, in terms of the zero COVID policy, it's very difficult to predict how it will pan out. And it's probably a fair assumption that at some point in time it needs to be eased. But the pathway to easing, it remains to be seen. It might be a slow one with the gradual easing, or it might be a sort of the full easing of the policy. But what is important is the reaction of the markets and what it means for the commodity markets. So if there are some cosmetic changes to the policy itself, but it remains in place, then the current, there may be a pressure on the demand because then it will coincide with the global economic slowdown. If there is a significant easing of the policy, then obviously it will provide a strong support to oil prices, to the gas prices, and actually across all the commodities.
Angelina, I want to turn to the here and the now, and that is the price cap that has now emerged on seaborne Russian oil, set at $60. My immediate reaction to that was that the number is a little bit high, considering where Russian oil is actually being sold on the market. People that I speak to tell me it's being sold around $56, $57. So as of now, it shouldn't have a huge economic impact. What is your expectation as to how this economic impact may evolve in the coming months, though?
Well, the price cap of 60, as you mentioned, is roughly in line with where Russian oil is currently traded. But we need to look at it in the conjunction with the EU embargo on the seaborne volumes of the Russian export. And we've already seen the reduction in the exports of the Russian oil so far. It's probably not significant. It's around 7%. And Russia was able to redirect some volumes to China, to India, to Turkey. So the introduction of the embargo, the introduction of the cap on the price will probably not remove all the volumes. Some of them will find their way to the markets, to the countries which I mentioned. But having said that, it will still have an impact on the market. We do believe that the total Russian exports might fall by about 1.5, maybe 2 million barrels per day by the end of next year. It's not a significant amount because the spare capacity of OPEC Plus is about 4 million barrels per day, and that excludes Iran and Russia. But at the same time, it might introduce tightening to the market.